Adani. Mishra Dhatu Nigam, well, if you look at the stock at the peak was more than 500 rupees, that stock has come down by nearly around half. The company, though, has guided for around 1,000 crores of order inflow in FY25. And also they are guiding for better times because of exposure to defense as well as the space segments. How are things panning out and what is their guidance with regard to the future? We're now joined by Mr. Rao, the chairman and managing director of the company. Hi, Mr. Rao. Good morning and thanks a lot for joining in. Good to have you on the show, sir. Let's focus on a couple of aspects. If I look at your performance as of the 9-month mark, there is barely any growth. But Q4 for you is the seasonally strongest quarter, right? Because bulk of your revenues are registered in that particular quarter. Given that scenario, tell us what you expect to end this year with, that's FY25 on the revenue parameter. On that base for FY26, what kind of growth are you likely to see? And give us your margin guidance. Please go ahead, Mr. Rao.
Okay. See, FY24 is the best year for Midani as we have achieved more than 1,000 crores, 1,072 crores we achieved, which were not there in earlier. But in the same way, if you see from 24 onwards, we are getting order book is booking. Earlier, we are below 1,000 crores. Now we are reaching nearly 2,000 crores. If you see January end, our order book is nearly 2,000 crores. And we are expecting some more orders for the balance period. And as far as turnover is concerned, maybe the turnover is same as last year, as our space business has come down. Space orders have completed. New orders we are expecting. So that's why the same turnover is maintained. As you rightly said, Q4 is the very important, crucial quarter for Midani, because in any defense industry, Q4 will be the boom. It will be the order book execution will be whatever 9 months executed, more than 60-70% will be executed in 9 months, with 60-70% of that book will be executed in fourth quarter. That means for this year, if you see FY25, we have executed 660 crores for 9 months, whereas for this quarter itself, we expect more than 400 crores. If that comes, definitely, our turnover this year also will surpass the last year. 1072, whatever is there, we are hoping that we will cross it.
So mildly positive revenue growth, sir, for this year, flattish year. But as you said, encouraging to see that your order book is 2,000 crores. So what does that mean in terms of execution for FY26? Are you more optimistic on prospects over there? And also, you were just going to tell us about your margin picture. So give us both those.
First, if I talk about the execution for 26, FY26, definitely it will be more because most of the orders what we got from the naval sector or aerospace, some development orders are there. You know, Midani is the company which is established for development of several grades. So once the grades were developed and successfully established, we will get some more orders and whatever this is called trial order. After trial order, production order will be there. The trial order is completed, production order will be higher value. Like that, I will get more turnover next year.
So
revenue
how much,
will be more.
How much more will be the turnover next year, sir?
We expect it will be, because I told you now, today we have 2,000 crores order.
Yes.
2,000 crores order book is there. Another 300 crores we are expecting, including space also. So definitely it will be more than the current FY25.
By how much, sir? Will you do 1,200 crores next year? 10%.
I can't tell. But
10% growth is possible, sir, next year? 10% growth?
Easy.
20% is difficult?
Little bit.
Okay, so 15%.
Why difficult I'm telling? Because the grades have to be established. As I told you, some grades are under development. Yeah. Unless the development is completed and it's successful, production cannot be done. Clearance will not be given for production by the customers. So definitely the growth will be there more than 10%. 20% we will try to achieve, but I cannot tell as it is. Coming to margins, see, because of the geopolitical situation world across, in the year 23-24, the raw material prices have gone up. As Mishra Dhatu Nigam Limited, almost all raw materials are to be imported only. It is not available in India. So because of this Russia-Ukraine war, sponge prices have gone up by 50%, nickel prices have gone up. Certain materials, the prices have gone abnormally. But now in the year FY25, it is little bit stabilized. I mean stabilized means it is at a range of some 10% increase over the last year it has come. Due to that reason, our EBITDA margins have gone up for the year FY25. If we see last year it is 20%, now it is 25%. Third quarter is a good quarter where we were able to get good EBITDA. That is two reasons. One is the raw material prices. Second one, see in Midani, almost all materials will be used virgin materials, and we can use the plant rivets also. Whenever that it is like a scrap. If the plant rivets usage is increased, automatically my margins will increase. That is one. And the third one is yield. Yield is the very, very important thing for the Midani. If the yield improves, my margin improves. So initially I will get the yield of 30 to 40%. If the yield goes up by 45%, my margin goes up. Like that, if yield increases, you know, when materials are produced, when expertise, that is when the period goes, automatically yield also goes. We will know what technology, what our PAG has to do, where to improve the melting performance.
Mr. Rao, thank you so much for, explaining to us how this business works and, how your margins are likely to improve as well. Next year, given your optimism of at least 10%, maybe not 20%, analysts will go with around 17 to 18% or 15 to 18% in terms of top line growth. Margins last year were 20%. This year, you're saying will be 25%. Can they improve beyond that next year, FY26? If you could give us a sense of that. And secondly, exports as well. You said exports were close to 67 crore in the last year. You were expecting close to 120 crore this year. With all that's happening geopolitically, next year, what kind of export number can we do?
This year, actually, exports, Midani started exports for the last 3 years only. See, the exports also started, lots of OEMs are coming forward to Midani and they are giving the small quantities order. Because no OEM gives a bulk order. They will check the performance of the supplier in the initial period because they are sourcing from India. What they will do, either Pratt & Whitney or Airbus or GE or Safran, all these people, they will give for lesser quantity initially. Go on, they will increase. Today, I have already executed for this year 60 crores. And in my hand, I have 40 crores order. And another 30 crores order I am expecting. So probably I may, near 100 crores I will execute this year. Near to 100 crores, 80 to 100 crores. Next year, once this order is executed, we are expecting huge orders. Huge in the sense, not in thousands, it will be in hundreds only. So definitely, we wanted to cross 100 next year, FY26.
FY26, it will be more than 100 crores of exports.
Yes,
and this year, you will reach closer to 100.
Nearly 100.
Very quickly, Mr. Rao, have you heard from the government of India if they want to do any kind of OFS or any kind of selling? They have more than 70% in the company. You have heard, or that's not on the cards?
Earlier, there was a proposal in the year 21, but the government is not mentioning anything. Maybe they might be wait and see. Now, you are aware that Midani share price has gone up to 500 and now it is reached to 260. It is just because of the, this world condition and all defense sector prices are coming down. It is only, maybe it has reached to something which is far low. It is not a correct price. Definitely it will go up because market correction will be there. It all depends on the internationally what is happening.
All right, Mr. Rao, it's good to have you on the show. We'll want to have you more often. We hope to have you at the end of this fiscal year or when you declare your numbers as well. But thanks a lot for joining in, and we look forward to interacting you more often. More than 10% growth for FY26. FY25 will be a flattish year, and they're optimistic that the exports will gradually pick up. For the time being, slip into a short break. But on the other side, we'll focus on the big story. Competition concerns for cables and wires players, they are back. As Ultratech, they have eyed their foray into the space. The management of RR Cable will be joining in on the other side. Don't go anywhere.